good morning, everyone. Or actually, it is noon now, so we are running a little bit late. But thank you so much for joining us today. As part of, as you know, Fintech Abu Dhabi was many years in the making, and we are now so excited to have it be part of the larger, the bigger, the better Abu Dhabi Finance Week. Now, after having just had really a wonderfully insightful panel on investing, let's kind of switch the focus and really look at the role of banks within the innovation landscape. Now, my name is Gabrielle Inzerillo. I am a financial regulator here at AGM, and I'd like to introduce our panelists for this session. Now, closest to me, I have Raheel Ahmed, CEO of RAKBank. Raheel, I'm afraid you're going to get the short end of the stick when it comes to introductions, simply because RAKBank is such a well-known consumer brand.
Thank you, I'll have a look at that. Yeah, thank you.
Now, here we have Binru Tan, CEO of OneConnect International. Now, OneConnect is an international financial technology services company that provides solutions for banks. However, do not be fooled. OneConnect products can be found in almost every bank in China and is listed on the New York Stock Exchange. So maybe a name to remember. And furthest for me, but definitely not, won't be forgotten, we have Zul Javaid, the CEO of UAE Trade Connect. UAE Trade Connect is a document clearing exchange system that is led by a consortium of 10 banks in the region and is a subsidiary of E&, which is formerly the Etisalat Group. So also a name you guys should remember. All right, let's get started. So the title of our session is How Big Banks Drive Innovation, which might seem like a little bit of an interesting title for you guys, because do big banks drive innovation, really? We tend to talk about how banks are these slow behemoths, these dinosaurs stuck in the past, that financial institutions, that infrastructure players are just fundamentally slow and maybe a little bit boring, and they're struggling to keep up with the pace of change, and worse than that, they're dragging nimble players down. So my very first question, and I'm going to ask Raheel to jump into it, is that still the case? Has this changed at all? What is the current state?
Sure. Thank you very much. Pleasure to be with all of you. So I think I would say that that view is slightly outdated. Banks are rapidly innovating, but we are in the business of trust. I heard somebody in the previous panel talk about trust, right? At the end of the day, we deal with people's money, and we are a custodian in many respects, shape, and form. So you have to deal with innovation with the level of security, level of trust that you need. However, having said that, I think most banks have a very large surface area as well. We don't select our customers. We don't select our employees, because we have been in this business for many hundreds of years since the financial system came into being. But we are rapidly changing our tech architecture, data architecture. There's a lot of open API stores many banks have now where you can ingest other people's services. You can go and be part of somebody else's ecosystem. And you are seeing more and more of that. So I think the notion that banks are slow, banks are behemoth, I think is not right, in my humble opinion. I don't talk only for RAKBank. I was with Barclays, I was with Standard Chartered, with Citi, some of the big global players. And the banks are doing a lot. But we are also at the same time dealing with lots of different types of customers. We deal with a huge amount of regulation, and we deal with cybersecurity and other many things as well. So you have to balance where you invest your finance capital and resources and what is the most important thing. So I go back to the fundamental notion of the trust with the customer and being custodians of their money is the most important thing for a bank. That cannot be broken. Anything else comes after that.
I like how you did the little dig at us, oh, it's all the financial regulators' fault, actually. Yeah, no, sure. But very, very true. Zul, I'm going to jump over to you, because I hope, as as part of a consortium, as that overseeing that you see the best face of banks. Is that the case, or is it squabbling?
Yeah, I would say so. I think what Raheel was saying is absolutely true. Banks are no different to any other industry in the sense that they have to compete and they have to develop and they have to evolve. However, there is a little bit of a drag because of the fiduciary responsibility. So that being said, I think banks, particularly large banks, are in an enviable position because they can follow different modes of evolving. They can follow different methods of innovating. So for example, they can be some product development in-house. They can be, in the largest of the banks, they can take best of breed from different markets and adopt it in certain markets. And then, of course, there is what Binru will tell us about, which is how to partner up with fintechs and to adopt the best or the most current thinking from fintechs. The model that we've adopted here in UAE, which has been quite successful, is by pulling together a consortium of banks to deal with a very specific problem, which led to the foundation of a platform. The platform has one use case on it at the moment, but it is a platform which will allow us to build more use cases. And the reason this has been particularly successful is because by bringing banks into the equation at the beginning, you don't get the problem of not invented here. You don't get the disputes about, well, if this was innovated by Fab, should Rackbank actually be part of it? Or if this was developed by ENBD, should Mushrik be part of it? Actually, if people come together as equal partners right at the beginning, you end up solving the issue of whose product is it. And that leads to what we found to be very, very useful, which is very high levels of adoption. So I think if we look at banks and where they come from, the best banks will be the ones that use a combination of different innovation methods.
Now, I don't actually remember if we're still using this term or if it's horrendously outdated, but you just reminded me of, I think it was trending in 2019 or 2020, the term co-opetition. Suddenly it was being used everywhere. They're like, we are cooperating, but we're competing, really.
So it's a little bit like that, but we use a better term, which is co-creation. Okay, co-creation is really about who are the different players in our ecosystem. So we've got banks providing domain knowledge. They're providing first-hand knowledge about the problem related to fraud and money laundering and duplication of financing. And then you've got the technologists who bring into the picture the cybersecurity element, the cloud element, the artificial intelligence to be able to create a solution that solves the problem. So co-creation is the way we use this word.
I like it. Back to the basics. Ideation, co-creation, execution. My next one is for you, Binru, okay? So stay with me. Now, a lot of players, when they get into this space, they dream of being this, D2C player, direct to consumer, that they want to disintermediate everybody. They want to go after the big guys. They want to be that big player that isn't selling their products to anybody. The reality is that a number of financial vendors or startups, anyone really selling their products is actually really doing B2B finally. They're doing B2B, they're doing even B2B2C, white labeling their products. So in this ecosystem, who actually needs who? Is it the startups and vendors who need the banks, or is it vice versa? And I asked that of you, Binru, because evidently with OneConnect, you've been very aggressively implanting your products within a number of banks. So please tell me, who needs who?
Yeah, I'm not sure whether is it a who needs who question. If you look at the fintech ecosystem in Southeast Asia, in Singapore particular, it has grown a lot from 2018. We had 100 fintechs in 2018, and then in 2020, we had about 800 fintechs in the Singapore Fintech Association. But it has then kind of slowed down from 2020. I guess it has reached a bit of a saturated. But from day one, you split the fintechs into 3 categories. The first category is the one that wants to be a bank and compete with Ahmad here. And the other category is the ones that want to build up their own B2C business, right? And I think that area is the one that is kind of saturated in the payment space. And then the last set are OneConnect type of fintechs that we only service financial institutions as a whole. It may be a neobank, it may be a traditional bank, but we provide technology. So OneConnect, we're the fintech arm of Ping An Group. Our parent company is also a bank in China. And we strive to take the best of what is invented or researched in China out for Southeast Asia. And the reason is very simple, because only the large banks will have R&D power to build their own solutions. And in a mid-sized bank in China is about the largest size banks in Southeast Asia. So large part of Southeast Asia banks will prefer to collaborate rather than to build on their own, with exception of a few. I also mentioned that I think the trend has always been that collaboration is from day one. It's just who starts first. We saw that the challenger banks, maybe between position number 7 to 15, they will start the collaboration first, and we saw that from the onset. Increasingly, we're seeing more and more collaboration, definitely. The decision cycle is also getting shorter and shorter. So I think collaboration from day one has kind of really matured. That's why this thing about banks being slow, I would say, has changed a lot in the last 5 years. Yeah.
Very nice.
Yeah, so I mean, all decisions we take, we always consider build by partner, right? So that's part of our ethos. We are deconstructing the bank into services, and then we look at which service is best provided by either building in-house, and what is our core competitive advantage versus what are services that we go and partner with the companies like OneConnect or other companies. And we have a lot of fintechs that we have partners both here in the UAE and in my previous job in Barclays. A huge amount of collaboration, cooperation, competition, whatever you want to call it. So I have personally never seen fintechs as competition, right? The other thing I think which is very important is that the decision cycles in banks is also getting much faster, and the type of skill sets we are doing. So technology in the past in most big banks was sort of, left on the side. Now the engineers and the product managers are working together, right? So it's become a very different ecosystem. And I agree with Binru that we all have to cooperate and partner, and that's very much in the ethos of RAGBank.
So stay with me for this next one.
Okay.
So when do you decide that you need to do your own R&D?
Yeah, so as I was saying, fundamentally you have to define what is your core competitive advantage. And I think that is where you don't outsource, you don't partner, you build and you keep your IP. Every company has the same thing, right? I mean, if you're an airline, you will have your own IP, right? And that IP can be your customer experience, right? You don't have to have your own planes, you don't manufacture your own food, you don't manufacture your own movies, but you still have an IP. So for us, the competitive advantage remains with us. Right now, I would say that customer intelligence and personalization is our IP that we want to keep very closely guarded and in-house. Everything else we partner with people. And as I said, we have now deconstructed the company into a set of services so that they are easily identified as to what you can do with whom.
I see. I mean, there's only so much IP you can claim on, lending and certain financial products that are very much copied over from one another that are similar.
Yeah.
If I can take a shot at that question on R&D, the question is not whether which part the bank should do their own R&D. The question is that you should understand all the tech that you're implementing, whether is it yours or not. Ultimately, there are a lot of things out there in the market that's maybe not worth doing R&D on your own, but banks should never adopt a solution that they don't have control or don't have understanding to replace, to enhance, and upgrade. Right? I think that's the key thing, keeping the talents within the bank to understand what you have implemented. That's key. Yeah.
Zol, we've heard about IP, we've heard control. Do you want to add to that?
So I won't use UTC as an example because UTC came together for a very specific reason, and it's not a question of who needs who. I will use an analogy from the telecom space, my parent company. So if you think about the App Store for Apple, the App Store is a very important place because it allows access to 1 billion customers in the iOS environment. But who needs who?
Well, it's a kingmaker almost, right?
Well, precisely. But without the apps, is the App Store worth anything? And without the App Store, how will the apps get out to the world at large? So if we look at that, that analogy, I think the word that comes to mind is symbiosis, because You can't have one without the other, and the other is enriched because of the other one. So I think it's a virtuous cycle, and it's not really a case of who needs who. It comes back to my earlier point of there are different modes of innovation, and in this particular area of partnership and creativity, it does make sense that the different players respect the roles of the different parties involved.
Very nice. No, that's a very good point. So we're absolutely not discouraging anyone from going out there and launching their startup or their vendor or such. We're telling them go, 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 and you will find clients if you have a good product. Okay, that's good to know. I think one question we want to touch upon before the end of this panel is a question that it's kind of pushed around and dallied forward, but it's the question of culture, right? We often talk about how culture is a key strength in companies, regardless of which industry. We mentioned the App Store just now. It's the same case for some very innovative banks that are well known or particularly aggressive. How do each of you in your own organizations, because you're all in leadership positions, very high, how do you promote that culture internally of innovation? Raheel, please.
Yeah, I think culture is a challenge for all companies, right? So I wouldn't say it's a challenge for some and not a challenge for others. You see the turnover, the workforce of the future, the workforce of today wants very different things from life, right? And the brand loyalty generally is in decline. Culture also comes, I think Binru said this, is how educated and how up to date the people who are making decisions are with what's going around in the world. So all the way from your board education to reverse mentoring and to decentralizing decision making, but decentralizing them and enabling people while making them think, I go back to my first point of this is the customer's money, it is their trust, so be as innovative as possible, but don't lose the trust, right? And then naturally you have regulations. I sometimes say banks are technology companies with a balance sheet and a regulator, right? That's all we are. But we have to make sure that that balance sheet and the regulator is also at the heart of any innovation we do. So a lot of, and we are trying to grow our own talent base to become more innovative in very different ways, as opposed to always trying to hire from the outside as well.
It comes back to your point on self-selection.
Yeah.
Right. Binru?
Yeah, in Ping An, we believe that you need domain knowledge in order to do the work. So it cannot be that a fintech company doesn't speak the language of the banks. To be able to sell them anything, you need to speak their language and understand their pain points well. Right, so One Connect, we started with 50% from Ping An Bank and 50% from the big tech companies. Yeah, so that it creates a blended culture. It wasn't easy. Our chairman, Peter Ma, said that it is very tough because it's like hiring lambs from, he calls the bankers lambs because they need to be prudent, they need to be careful, they're taking care of public money, right? And then he calls the technologists wolves. Right, and they're hungry, they're aggressive, and so this culture blend of lambs and wolves takes years of storming and norming in order to get there. And I think for One Connect today, we have kind of a lot of job rotations between, we have half bankers, half technologists. So it's coming to settle nicely a group of people who knows the customers that they serve. Yeah.
Very nice.
So, Gabrielle, I know what you're hoping for. You're hoping that somebody on this panel will draw a distinction between the rather staid and boring and slow culture of a bank versus the more aggressive and fast-paced culture of a fintech. That's what you're hoping for deep down, right?
I don't know. I'm a financial regulator, but 2 years ago I was VC, so I'm the worst example of that.
So I think it's different to that. I think that there are incredibly innovative people in the banking world. And I think that...
However, I want to cut you on that because, yes, there are incredibly innovative people in the banking world, but I also felt in the last few years, a lot of those people chose to leave the bank to do their ventures elsewhere.
Okay, that's a good point, but I would put it to you that's a cyclical thing.
Okay.
So at Sibos this year, there was a really good panel, which is the banking conference held by Switch. There was a really good panel in which they were talking about how the last 3 or 4 years has been, the pendulum has swung towards fintechs. And this year, because asset prices have fallen so much, funding has dried up, it's an excellent opportunity for banks to seize the occasion and take the lead in either these partnerships or in product innovation generally, and which is a very interesting point. And I think actually what you'll find, and maybe Raheel would like to comment on this, I think the brightest people who went away into the fintech world lured by options, etc., will be rushing back to banks because A, they have the platform, they have the customers. B, they have the depth and they have the research and deployment funds, as well as the ability to move into a large space very quickly. And I think this is the big advantage of having of a bank being in the driver's seat rather than a fintech being in the lead just because of product innovation. So coming back to your question about culture, I think actually the pendulum is swinging back. And I would come back to say that banks are innovative, especially now that they've had a bit of a wake-up call over the last few years about how things have digitized. We've seen so many panels here today about how digitization, we had His Excellency Mr. Al Ghurair talking about what percentage of transactions are initiated digitally, and it's changed the mindset, it's changed, the entire paradigm has changed. So if this conference was happening 3 or 4 years ago, it would be a different mindset. Today it's a different mindset. I dare say in a year it'll be a different mindset.
Well, if I'd been doing this panel 3 years ago, I would have been ripped jeans. So that's an indicative. Raheel, Vinru, would you like to make closing comments on this? Is the pendulum swinging back?
I totally agree. I think that the banks now have capacity to hire a lot of the fintech talents, definitely. Yeah.
I just keep saying this, and I may be the odd one out. We almost pitch fintechs and bank as two separate parts of an ecosystem that are competing with each other. I don't see it that way. You go to UK, look at all the neobanks that were granted license and look at their senior management teams. It'll be a mixture of very seasoned bankers and very innovative people. And I think regardless of whether you are in a fintech or in a bank, you need a mix of both. At the end of the day, you will have shareholders who may be enamored with lots of new customers just now, but at some point they will say, give me some return for my money, right? When that happens, or you become so big that the regulator says, okay, now can we come and talk to us because you've become systemically important, you will need a mix of both. So I think the culture is a factor, and talent is a factor of where you are in the company's life cycle. And I think both will need both.
Wonderful. Zul, Vinru, Raheel, thank you so much. Ladies and gentlemen, you heard it here. The fintechs are coming home. Thanks.